Hey guys, welcome back. In today's video, we are talking about the suppression before the squeeze, how shorts can't exit, the AMC Gme potential partnership, and many more in this video. First, we're taking a look at this. Suppression typically happens before a short squeeze. So over the years, what we've seen for AMC is that every time before it has a major move, we've been seeing increase in suppression. Even when you take at the recent move, what we talked about over here, what you would have realized was that just before that, we were seeing 80% up to 90% dark pool usage for AMC. So the suppression then was obviously insane. And then when we see that AMC finally broke out of that, it saw the price move up by over 100%. And so now we're seeing the same thing again. And it's no surprise that we're seeing more and more of these events happening for AMC right now, because it has so many major things happening and so much capital that's flowing in and buying and accumulating AMC. If you already want to take a look at what's going on with the suppression, the most recent FTD data on AMC with Apple as a reference, the number of shares that were sold but not delivered. So bear in mind, Apple's float size is 26 times that of AMC with a market cap ratio of over 4,000x. Yet when you take a look at what's going on with the FTDs, we're seeing in FTDs for AMC in the millions, and for Apple, you can see the highest it reached was only 400,000. This is a stock with a 4,000x market cap against AMC, with a 26x float ratio against AMC, yet we're seeing a bigger FTD for AMC. And so it just goes on to talk about what we've said with the suppression that's happening, what we've said with how shorts are not able to deliver, and the constant creation of synthetics. So if you want to take a look at why AMC is down, despite the fact we've been seeing major news for AMC, we talked about Arena 1, we talked about how well Q1 was. It's because of everything that's ongoing behind the scenes, like FTDs, like the naked shorts that we are constantly seeing. If you even take a look at here, with a 19.27% short flow and elevated 4.14 days to cover, the stock is heavily bet against and highly primed for a short squeeze due to limited exit liquidity for bears. Now, we already know that there's a limited amount of shares for these short sellers in the first place, hence why we're seeing the massive FTDs, and there will be more data we'll talk about later on as well. But furthermore is the fact we're seeing how the flow is still being shorted. Now, bear in mind, despite the fact it's a 19.27%, we do understand that it's a lot higher than this. We've seen from other data, other indicators that has shown how the self-reported data is nowhere near what the actual truth is. We've seen previously in the past before where they've shown us 19% on short interest, yet what we actually saw was over 300%. The synthetic short interest was actually 300%, and that wasn't even including every factor involved. So the fact we're looking at this right now with a 19.27 with a 4.14 days to cover, we should really times exit times 20 exit, because that's what the true number will be closer to. You can see here, firstly, short interest was officially reported for the period ending April 30th, 2026. And the key numbers is 106.23 million shares short, 17.43% of the float, an 18.65% increase from the previous report. So firstly, what we have to understand is that it is still increasing. The short interest for AMC is still increasing. And that just sums up pretty much everything we need to understand about what's going on behind the scenes. But then secondly, it's about understanding that very likely it's not 18.65% from 17%. It's an 18.65% on 300% short interest, on 400% short interest, and of course higher than that. And that's why we know, that's how we're seeing the suppression manipulation happening. And it's why we've always said that the price of AMC going down right now isn't because people are selling now that they see how well Q1 earnings is, but rather because of the manipulation. Furthermore, you can see another showcase of how these short sellers are not able to find liquidity, are struggling to locate shares, because we're seeing how many shares is firstly being lended, and then secondly, how many shares are being borrowed. Another 2.5 million already borrowed, 7.9 million on the day so far. Remember, this is something that has been constantly happening now for the past few days. One of our theses is that Discovery Capital is lending these shares out. The reason for this is because if they are playing this for the short squeeze, then it is to a bigger plan. And we talked about this where example of this, and again, this is still a thesis, is nothing confirmed, but it's the fact that they know that there are short sellers out there right now who are desperately in need of AMC shares. And because they have an abundance of AMC shares because they've been buying, they're willing to lend them out for cash in return. And with the cash in return, they are then buying more AMC shares, which in return forces the short sellers to then create even more synthetics. And if they create more synthetics, it means that they need to borrow even more shares. And now Discovery then repeat that whole process to the point where they run out of money and will have to cover, and that will squeeze this AMC. Once again, it's still only a thesis, is nothing that's been confirmed, but it could be something that is being played right now, hence why we're seeing how much shares available are being borrowed. Then what we're looking at this as well, another example of the desperation. When you can't short it any further into the ground due to buying demand, just route it all off exchange. And what we are saying is a 73%, because bear in mind, the people that's lending these shares out, if it's Discovery lending them out, they only have a limited supply. At the end of the day, the majority is of course still owned by the apes who aren't willing to lend out shares. And so when we do see them struggling to find shares, when we do see them struggling to create synthetics of AMC, we're then seeing them using a different tactic, which is routing the orders into the off exchange. But that itself kind of just confirms how much buying pressure there is and truly what the demand is for AMC. And it just goes on to then reflect back to what we are saying here. There is no one selling because of AMC good news. It's only short selling. The natural reaction and where it's actually happening is that people are buying because they see how well AMC is doing. You can see totally normal after the 6th average $100 million weekend box office. So over the past few weeks, we've been seeing how well the box office is doing, yet AMC is going down. And that clearly doesn't make sense because of how much market share we have in this and what it means for the box office to recover. Because you can take a look at it here, always refreshing great news for Cinemark trading at a healthy price per share. But wait, isn't AMC the biggest theater chain on earth in the same industry? So you can see what we're looking at as we're seeing how a booming box office, a thriving box office, you're seeing our competitors winning, you're seeing how they're recovering and thriving from this, yet AMC is not, despite the fact we've shown how great Q1 earnings is, despite the fact we've seen what it's actually happening and what we have planned for the future as well. As always, AMC continues to go down for no reason, even after breaking records. Technicals don't matter, just gonna keep buying, and that pretty much sums up the majority of the apes, and is why we've said the demand for AMC is greater than you think. It's something that just can't be shown on the chart because we're constantly facing 70, 80, 90% dark pool. And you can see how they're trying to use the news articles right now. You can see here, forget AMC. This rock solid evidence stock is built for the next decade, not the next meme spike. Once again, bashing AMC despite how well AMC is doing, despite how strong AMC has put themselves in. And this is what we've said with how they're only doing this to benefit themselves and not actually caring for what is the truth. If you want to take a look at the technical analysis, if you can, what we are seeing right now is AMC is moving into a very strong demand area. So we're going to continuously seeing people start to accumulate AMC, start to really hold on and buy as much AMC shares as they can. And that kind of just sums up what's going on for the shorts, as they only have until next quarter earning releases to unwind this mess or be completely steamrolled. All the long-term swaps that have been hiding short-term, all of the offshore positions, all the FTDs are the markings of the perfect storm. So we are in no rush. We have been accumulating, we have been buying. We're seeing how AMC is just pivoting further and further away from bankruptcy. The increase in revenue, the increase in profit, the reduction in debt, All of these things are just showing the healthy signs of a company, and apes have all the time in the world. And so we are willing to do this to fight back against the short sellers. And for them, every time we're releasing earnings, every single day that goes by, it's a ticking time bomb for the short sellers. And we talked about how well AMC is doing. We've already talked about this before, but if you take a look at what AMC has been doing in the past before, these are all the improvements that AMC has made and will continue to make, and of course, further that are in the line. And so if you want to talk about how AMC is only going to get stronger, this is the reason why. And if you see some of the potential, AMC need 2 auditoriums in 860 theaters to have 516,000 seats. 24 concerts a year is 886 million, and 48 concerts will be 1.7 billion. Now, what 4 screens per theaters can reach 1 million fans? AMC gets 40% of the tickets and 100% of concessions. So this is obviously talking about how big this could potentially be. And like we've said, if we are seeing Arena 1 working to its full potential that's already been marked out, bear in mind that that may not even be the full potential. But even if we talk about what we are saying that could happen for Arena 1, you can imagine how much more money can be made. You can imagine how much more profits can be made and how easily AMC would then pivot to the next level. And that's basically what we are seeing right now. And another big thing is recently we've seen how Adam Aaron started following Ryan Cohen. And now what people are assuming is that the last time when Adam Aaron followed Beyonce, they announced they were working together. Is this his way of letting us know something is in the works? So now, on top of everything that AMC has done already, what we could also be seeing is a potential legendary partnership between AMC and GME. And that was something that I would definitely want to see. We've already talked about in the past before how a partnership between the two can greatly benefit each other. The reason for this is because firstly, GME can be opened up in AMC locations that will boost their revenue. But secondly, it works as a both way of increasing traffic for both companies. And so this is something that could potentially happen. Again, going back to what we've said, currently, we're seeing the best May ever at box office. On top of that, we're seeing how the domestic box office has passed 3 billion. We're trending towards 10.5. So these are all good signs of AMC right now. Everything that we talked about with how the potential, with what AMC has already done, with a potential partnership between AMC and GME. So we're talking about the past, we're talking about the future, and if we take a look at the present, you can see how well AMC is doing. And so we've just said, with the strong box office momentum, with how they're focusing on theatrical distribution, AMC is in the perfect position. I have strong beliefs that AMC is only going to get bigger and better as time progresses because they are becoming more and more efficient as a company, because their infrastructure is getting better and better. And so that profit margin is going to increase, the revenue is going to increase, and that would be the deciding factor. And so for the short sellers, they're then obviously not in a good position. We're seeing the short interest data, we're seeing how they're increasing, we're seeing how they're in desperate need of shares. You can imagine how much panic is being felt by the short sellers. And remember, there's always that key point with Discovery that at any time potential, they have the ability to recall these shares. And if they do, we are seeing massive pressure being built on the short sellers as well. And so because of this, we're continuously seeing apes increasing into their ownership, accumulating AMC, forcing the shorts to create more synthetics, and eventually speeding up the short squeeze that we want to see. Now, another big thing that with GME right now is currently GME didn't get eBay, but potentially they might be getting Etsy. And this is still an assumption, this is still a thesis, this is still up in the air, but we're still looking at some major things happening. And so definitely a potential partnership between AMC and GME first would be a good starting ground for GME. As always, this is Financial Advice, and I'll catch you guys next time.